So now I'm going to go back to the bank statement and check off the fact that I've already entered this. And we only have one more transaction to check off. This one happens to be an NSF check. NSF means non-sufficient funds. What has happened is a customer wrote us a $700 check, probably in the previous month or previous 2 months. We entered it as a deposit, and the bank at that time increased our balance. Now it's February 13th, as we can tell from this date. The customer didn't have $700 in their account, so our bank is taking the $700 back out of our account because it is a bad check, also known as a bounce check, also known as an NSF check or a non-sufficient funds check. So let's go look in our deductions section in QuickBooks. Here's our deductions, checks and payments, and see if we have a $700 deduction. We do not. So we have to enter it into QuickBooks. Our first task is to find out who wrote that bad check. There's lots of ways to do that. One way is to go back to the register. So we could go back to the home page and click the register button. Check register. We could go to banking, use register, but let me go back to the reconciliation and show you yet another way to get to the register. You could just right click on here and choose use register. That's actually the fastest way to do this. Now we're going to look in the deposit column, we're going to look for a recent $700 deposit that is now being taken back from us. There we go. On December 26th, just a couple months ago, we had a $700 deposit from customer I am broke. Now we know who wrote the bad check. Now that we know the culprit, we have to increase the customer's AR because they once again owe us the $700. And we have to lower our checking account by $700. One way to do this would be to go to the Make General Journal Entries window. And to debit AR and credit the checking account. The problem is this company does not have AR. The only receivable they have is a note receivable. This is not a note receivable. We need accounts receivable. So we will need to add the accounts receivable account. To do so, notice accounts receivable is not on this list. So we look down here and there's accounts receivable. We enter the name and save and close. Now we have accounts receivable. And the debit was $700. And then I'm going to click down here, and we need to remove the money from our Bank of Tomorrow cash account, our checking account. Notice how it populates the $700 credit automatically for us. Now it's also important to know that with the accounts receivable, we have to say, well, who owes us that money? So under name, we say I am broke owes us that money. Now one last thing I have to check is the date to make sure the date is right. I believe it was the 13th. And yep, it was the 13th. Switch back to QuickBooks. We're going to choose the 13th of February 2010. Save and close. Then we need to go back to the bank reconciliation and check it off. By the way, now you can see the transaction is in our ledger, our register for the cash account. Remember, the register is just another way to show the debits and the credits of an account, but use it in a friendly way. Payments and deposits is much easier for people to understand than debits and credits. So we can close this window. We go back to the bank reconciliation. We find our $700 deduction. Now notice the difference down here was minus $700, meaning we were $700 off. So once we check this off, the difference down here is 0. So switching back to our bank statement, I will check this one off. So everything on here has been checked off. We go back to the bank's reconciliation, and the difference is 0. That means we are done. We can say reconcile now. It asks us if we want to print reports. Notice down here, it tells you how to print the report later if you want to. I'm not going to print them now. I will close. And we are done with our bank reconciliation. Now the book shows another way to enter the NSF check. The way we did it is easy to understand if you know debits and credits, basically if you know accounting. But there is another way that you could train a non-accountant to do it, and they don't need to know debits or credits. So one way to do it that the book shows us is to use the Create Invoices window. Remember, the Create Invoices window is for when we bill a customer and receive payment later. In other words, this is when we're going to charge a customer AR. So this window behind the scenes automatically charges a customer AR. So we could have gone in here. We could have changed the date to 02/13/2010. Oh, don't forget the customer. I am broke. So what we're doing now is we're going to charge them, or we're going to put on their account $700. Now the way to reduce the money automatically from our checking account is to use this NSF item. Notice it's an other charge. And the NSF item is set up to be a return check non-sufficient funds. So to find out how this NSF item is working, you go to Lists, Item List. Here is our NSF item. If we double click that, it tells us that this NSF item is an other charge, so it's going to reduce the account that it's associated with. Here's the name, NSF, and the account it's associated with is the Bank of Tomorrow. So in other words, whenever we put this NSF item on an invoice, it's going to automatically reduce this account. So this NSF item only works with this checking account. So the last thing to do would be to charge them $700. Save and close. Now this will create a duplicate transaction, but I just wanted to see you or show you how this works. Go back to our check register. And notice on 2/13 we have 2 transactions. Here's the one that we entered, 2 transactions for I am broke for $700. Here's the one we entered in the general journal window, and here's the one we entered in the invoice window. They both are doing the same thing. $700 payment, in other words, is reducing our checking account. Remember, we are in our checking account. And then it is increasing the AR. Now, sometimes students have trouble understanding the check register because they're more familiar with debits and credits. So we could run a journal report, and to automatically, or just to get rid of everything else except for the transactions on that date, we're only going to use that one date, 2/13/2010, 2/13/10, and there's our 2 transactions. And notice the one that we did first was here, entered in the general journal. It increased AR and it lowered our cash account. When we duplicated the invoice, just for practice, when we duplicated the transaction just for practice, we used the Create Invoices window. It's doing the same thing. AR is going up, and the Bank of Tomorrow cash account is going down. So you can do this either way. Most students are going to understand this way better, but if you're training an employee, they're probably going to understand the invoice window a little bit better. You would train them to use the invoice window and then use the NSF item. So I just need to remember to go in here and to delete this duplicate transaction. So when processing an NSF check, you can choose to use either the Make General Journal Entries window or the Create Invoices window. Now, at first, the reconciliation may seem complicated, but once you practice it several times, it gets much easier. Eventually, it becomes second nature. So I recommend you back up and restore the original file and do this reconciliation multiple times until it becomes second nature. There may be a similar reconciliation on your final exam. And in the real world, you're going to be reconciling the checking accounts on all the different credit card accounts every month. So you'll get a ton of practice, and this will become very easy for you in the real world. But since we're learning it, you need to practice it until it does become second nature.